What I wanted to do today was something I was talking about with one of my mates upstairs, and he was talking about a little bit on technical stuff and sort of asking me a few questions about it. And it's interesting sort of seeing his take on how he was looking at various different things and say he was really trying to improve on some sort of technical side of things. He's a fantastic trader in terms of his ability to pick trades, execute trades, take on an idea, get into a trade and make the most out of it. So it's quite a compliment to be asked about my technical views on these things. So what I thought is I'd sort of extend this a little bit to how I came to some of the ideas that I was talking to him about yesterday. And a lot of it is about thinking about positioning. Now, what I'm not going to try and do here is point out any sort of special tools that tell you about positioning or talk about commitment of traders reports, things like that, because I think that can often cloud the judgment. The way I think about positioning, the way I think about what's going on, is in a way put yourself in the shoes of other people and ask, not from a day trading point of view, because it's very easy to do that and it's very easy to get sucked into this, oh well, everyone's a day trader and everyone does the same thing. Most people aren't, and most people don't do the same thing. So put yourself in the point of view of someone who's a little bit longer term, someone who's thinking 2-3 days, a week maybe. The people who aren't going to give up on the pullback of a few ticks. The people who are then going to give up beyond a certain point. So what you're trying to establish is where exactly is the overall sentiment. And when I say sentiment, I mean positioning, direction of belief that people have in the market. Where exactly is that changing? And what's giving you clues towards that? The thing we were talking about yesterday in particular was the bund. I was talking about, I was looking for a move up in the bund yesterday, and I'll explain why in a little while, but I'll try and give a little bit of sense as to, before that, what's going on. And we'll start off up here. This is the daily chart down at the bottom, around about the 174.67, 75 area. This is where we had a few poor highs, and I mentioned this a few weeks ago on one of my morning sessions. Now, what the poor highs do, particularly from an hourly point of view, having had a few days sitting just below these highs, that's getting people positioned long. They've broken a small trend. We're coming back up here. This is the point of the confirmation of the double top. So there, just below those 174.67, that's the point where this double top's confirmed. So you're now getting people positioning, trying to play the break of these highs. But equally, you're getting selling from here as a chance to play that double top once more. So in the build up to this, what then happens? We get a gap down on a bit of news that turns and rallies straight away. This is getting you some positioning. This is going to get you some new positioning coming in. People are going to be buying this, looking for that break of the bad highs. Anyone who is buying it in here is going to look at this and think, right, we've got an opportunity to get better prices and let's go for those highs. When that doesn't materialize though, you've now got a lot of people who bought that gap down who are now looking pretty stuck on that trade. They've not got the result they want. All they're looking for is a break of the highs to exit. When it doesn't come, and it closes up here on this day, we then get this slow drift down the next day. That effectively is one more rejection from up here. So now you've got a lot of people positioned that are all going to be uncomfortable with a long position here. Now, from thinking 2-3 day perspective here, until you get below this low, they're going to be fine with that, and they get away with it on this first day. It's the next day that starts to push lower. Once you then get the beginning of the next day, drops, and then you start seeing this selling coming in. That's where anyone who thought that they were okay up there is not. This also breaks the daily uptrend, which is very significant anyway, because this now is bringing in even longer term participants who are looking at this thinking, okay, we got away with being long still down here. the trend's moved up, you don't want to stay long below the trend. So it brings in more and more selling. So this gets people short. Takes away the buyers up here, starts getting positioning short. People are going to see this break and start thinking, right, we need to get short. And this little consolidation area, people will then use to get themselves short once more. So what you can be looking at here is your position is changed from predominantly long to longs getting out, new shorts coming in, more shorts building up, shorts then getting the result thereafter, a continuation down, break of this wedge, further consolidation, another move down. Now what you get on that last move down is a very strong rejection. Drop, turn. And by the end of the day, you close virtually at the same price we started off at. That's showing you that some of these sellers may well have used this as a chance to get out when you got that flush down. It's also showing you that you've run out of any selling, the speed of that rejection. This is going to bring in new buying. People are going to react to this candle on the daily and think maybe we've got a low here. And so the following day, you end up with a tight inside day of buying. People just consolidating. If you want to buy this as well, you're not going to rush to buy from down here. We're essentially still near the lows, or we're at the lows. You're not going to rush to buy. So any little dip, you're going to use as a chance to get long. So you're getting passive buying in here. Waiting for this uptrend to break to then give you this move. What then happens is this creates an inside day. The inside day breaks to the downside. A few of these new buyers that have come in here get rushed out, and that gives you this liquidation move down, early, fast drop. That's a very clear sign of a liquidation. That's long positions who've gone, not working, get out before this becomes painful. But what's notable about this is this drop doesn't break the low and then forms this sideways little box down at the lows. Can't get any push further. This is exactly the point where anyone who believed that we were now going lower is going to use this to get short. Now this is different to a trending type move. If this drop here was because of further selling and people trying to sell and sell and sell and sell, you would expect this move to consolidate for a small period of time and then go again, and then consolidate and go again. But you've not seen that. So what that's showing you is that you're not getting consistent additional selling. It was selling from the longs in here and nothing more. And any selling is just passive. People just waiting for it to bounce and sell a bit. So it's easy to sell here, but also you've not been given any confirmation of it. So those who have found it easy to sell are also likely to come out quite quick, which is what got me into the idea of this reversing yesterday. That if this was a genuine sell, we should have seen this break the low, and it didn't. We should have at least, if it was a genuine sell and just consolidation, seen the next day take a shot to the downside, but it didn't. These are all the clues that you were starting to build up. And so once it comes out of this box, and don't get me wrong, if it come out the box to the downside, absolutely you can be looking for the move down, but it doesn't. When it comes out the box to the upside, you've now got more position in short here, which gets trapped, and you get a liquidation up, breaks the trend, which is very steep as well. So think about it from the point of view of anyone who's been selling this and trying to stay in. They've got a very quickly moving stop. That stop's getting closer and closer to them, faster and faster, or as close and closer to the market. Means that they're able to get out for close on the maximum profit on the trade, but equally means that they're all going to start coming out quite quick. So it's then these shorts get stopped out, a few trailing stops get stopped, and we move up and consolidate once more. And so this basically is a catch the short-term longs out, catch the short-term shorts out, where do we go next? Yesterday's Brexit news helped this. And so when you got this little flick back down, it was a chance to buy from the bottom of this box or top of the box to set you up for a move higher. That then now is effectively giving you a base. This is where if you did want to buy for a slightly longer period, you'd think that those people are coming in now to try and get a move up to sort of 172.57s, potentially even as high as 173.31. Now you don't have to just try and think all these things through from a chart. A profile is going to help you out with this. So this is your profile view. Here's your rejection day, and you can see this big tail tapering off of volume and the close and the open right close to each other. That's about as textbook rejection type day as you're going to get. You then get an inside day, which is quite expected, being as we had such a wide range. Wide range, wide value area acts as support and resistance. It's the tighter value areas that don't. So from this inside day, it's then a question of which way do we go? We are likely to have been building up longs because of that bullish looking daily candle. But when we open, trade inside value and come quickly out, that sets the tone. The fast move down happens, that's your liquidation. That's anyone who's been buying it in here, and the inability to stay inside value is a suggestion that you're wrong buying it there. Drop down quick and it gives you this classic B-shaped profile. That suggests to you that this selling is not new selling coming in and trying to push. This is sellers getting out of their longs. And you then get the repeat the next day. You need, if this is going to keep going lower, the selling to come in, not to start sitting around in value, certainly not to break through VPOC. You want the selling to come in, hold out of value, and then keep on going. But clearly what's happened here is there aren't any new sellers coming in here. I think the longer term people are still going to be looking at this rejection candle. And the fact that we've not broken the range of this is a suggestion that we're still looking for a move up. So when we open, trade up through this value area, and note the small value area does not provide you any resistance. Straight the way through it, then we trade all the way through the low volume, catching out any new shorts that did establish there, and it's the short-term shorts that will rush for the exit and give you a P-shape type day. So a short liquidation day. The news then is what gives us this final bit, and that's a bit to doubt in a way that this doesn't necessarily give you a sense that we have to go higher. But we did break decisively through this high volume, and so this is then the area of support to be looking for from a profile point of view. As long as we're not falling into there, this does still look good for a move towards the upside. Now getting onto that liquidation back up trade, this was what the P-shaped day down looked like. There's your volume profile on it. This was the inside day break, just there. That's where the acceleration came from. Quick move, this is a 5-minute chart, and the majority of the range is done within an hour. That's pretty typical, even within half an hour. That's typical of a liquidation move. Trend moves start off with a push, consolidate, push, consolidate, push, consolidate. Liquidation moves fast down and then consolidate. And this is the range you then establish. The fact that this couldn't make a new low, and then on the bounce we couldn't get below or get out of this range, is not suggesting that you're getting this continuation pattern, a flag or anything like that. Instead, you're just getting consolidation of positions, hoping that we keep falling. The next day, small gap down. As soon as you get back inside range, this way you're looking for a move to the other side. But perhaps more importantly, as soon as you come out of range, then all of these shorts are going to exit, and that's what then takes you up for that move. That's why I favoured the move up, because the inability to create a low, and then even on a bounce, the inability to do anything apart from range sideways was not showing you any strength of sellers. I'll give you a couple of other examples, slight variances on this, but also thinking about positioning. This is cable with a positioning grinding higher. What you see, impulse up, impulse up. After that, think about what people are doing in here. They're not rushing to buy. This was the rush move. This was where people had high conviction. They drove the move up. Instead, what you've seen then is this grinding higher. And every single day does not test the previous day's low, one time framing. What this is showing you is that anyone buying it, if you just put your stop below the previous day's low, which you would if you're a bit more long term, you don't get in any trouble. And the market grinds for 6, 7, 8 days, keeps on pushing you on side. Also, anyone buying it now is not an active buyer. They're merely waiting for these little drops. And on any sort of bad news, people are just picking it up on the dips. We've seen it a few times on the way up here, 1,000 lots sitting as the market falls. They're just trying to collect on a drop rather than buy it as it rises. So what that's telling you is that, one, you don't have an overt willingness to buy, but also the higher and higher you get, how many more people are going to keep on buying when you get up there? Less, you're running out of buyers. People are getting themselves into a position. So now the sellers have got more power. It's not just people selling to get themselves into a position, it's people selling to exit this. Once they come out of that, or once the buyers up here exit, that creates your quicker move down. Which is why now, on the break of this trend, we could start seeing more and more people exit cable positions, bringing it lower and lower down. Of course, we've got further Brexit developments potentially, which could change all of this, but we are now in a situation where your reason for buying is starting to diminish. You've broken the trend. This slow and steady buying and getting away from it has finally broken the previous day's low as well. Imagine you're in that trade. Imagine you're long from somewhere down here. You're 3 points on side. How much more do you want to hold on to this, having seen a lot of your reasons for being in the trade disappearing? We're going to have a look. This was one I talked about in a debrief a little while ago. Different to the bund, which had a rejection and then consolidation, this is a situation where you have drop, rectangular consolidation, rejection straight back in. So the same kind of idea that this rejection is showing no one's actually willing to still sell this. Once you come back into the block or into the box, anyone who was short in here has now been shown that your short has perhaps not got any more legs in it. So you either got out as it bounced, or they're now going to start getting out as it comes back through the range. Once that range has been broken to the upside, it then gives you a support for then a continuation further to the upside. So it creates a little base for that market. But all this is about just thinking through what people are likely to be doing. What are people going to be doing here? Have we started to exhaust some selling? Yeah, this is a consolidation on the back of a pretty fast, pretty large drop. So these are going to be late sellers looking for a continuation. When they don't get it, they're going to exit relatively quickly. The chance to get in for a bigger move has perhaps been missed here. So staying in this for a long time, or staying in this after a rejection, is less likely to result in a further drop. It's the beginnings of the moves that will result in those larger and continued drops. That's what you've got to be thinking about. So just think through positioning. What I say with this is not about special tools or clever tricks to do it. It's about just ask yourself, what would you be doing if you've been short from up here, or if you got short on this first move down? How keen would you still be to stay in having seen that rejection? So think about that on your next, when you're picking your next trades, or thinking through what's going on next. What are people doing? How are people positioned on that? And just thinking through from the point of view of what would you be doing if you were that little bit longer term.